Welcome to MRE Uncut, where we'll give you real and practical insights into the real estate scene in Melbourne. We'll discuss what's happening in the industry, all backed by MRE's history of over 30 years in the game. With that said, let's jump into this week's episode of MRE Uncut.
Welcome back to another MRE podcast. Today I'm here with finance guru Jason Kloszynski. Jason, welcome to the show.
Thanks, Steve.
I didn't introduce myself today, so my name's Stephen Fitzsimon, if you didn't catch that. I'm in the bad books already. Jason, now, thanks for coming in. Historically, we go back a little way. You've always been the finance loan specialist that I've been working with, and I wanted to have a chat to you today because we've got so much movement at the moment. Read in the paper this morning, first-time buyers are taking up something like 26% or something like this of the market for people getting into homes, which is a high. It's not normally that high. Investors are down low. So I wanted to focus a little bit on those first-time buyers and them trying to get out of the rental cycle and setting themselves up for success to being able to buy a home. If it's not now, it's in the future. We've had a few podcasts and talked about how we believe that the prices for apartments in inner Melbourne are as low as they're ever going to be right now. And therefore, if people wanted to get into apartments, it's sort of a good time now. And so I then sort of think that we need to also help people with the focus on how to get into an apartment sooner rather than later, and therefore understanding what it takes to get a loan to buy one of these places is pretty important. So hence your invitation to us today. Tell us your background, where you sit, what you do.
Thanks, Steve. I run a mortgage broking business, have done so for now about 7 years, called Finance Source, based here in Melbourne. We lend across the country though, so there's no geographic boundaries with, I guess, where we lend. My background's always been in some form of finance, banking and finance, for as long as I've known you, and then even before that.
Yeah, let's not talk about that.
Yes.
Great. So you're the man who can answer the questions that we've got today, and I want to take this from a sort of a primary. I haven't loaned before. I want to do that sort of stuff. What are the biggest factors that I've got to consider before I go and speak to you about getting a loan? And when should I do that in terms of this journey that I'm on? I've sort of decided that I've got to pull my finger out and buy a place, or perhaps mum and dad have said, look, it's a good idea to, why don't you start looking to buy a place? We might be able to help you out. What's the next step that they should be looking at?
It's all a planning piece, and you can't overplan is probably the easiest way to answer it. Going in blindly just into the local branch and saying, hey, how much can I borrow, is not really preparation. You need to have an understanding of your income, your expenses, what's left over, and therefore what can you afford to then repay debt. Much in the same way as if you were renting, I guess. You need to understand, well, what capacity have you got to pay your rent, but now substitute it towards repaying a home loan. So the starting point is all in preparation, in actually identifying how much do I earn, how much do I spend, what have I got left over, and therefore how much can I borrow.
And when you look at that, when you're starting, you might go, okay, well, I earn, let's call it 100 grand. I pay tax on that. I've got that amount left over. What else do you do? Should I already be speaking to you as to the calculations for how much I have left over, or should I just sort of work it out because I don't have smashed eggs and mayo and all. What do they call smashed avo? So that's how little I do that stuff.
We sound a bit old when we say that.
Yeah, I know, and old. Well, I do have avo, but I don't get it at a cafe. So I don't do that. So perhaps I'm more, what's the word? Money focused or money conscious. Perhaps I'm not spending on what do they call it, Afterpay and Uber Eats, and I'm a bit more nerdy in my
Straighty 180.
Yeah. But if I'm like that, does the bank see me differently from somebody else who's my age who earns 100 who does all that?
Yes, they do. But it also depends in the way you present your application. So to go back to your first question, what should I do from here? Obviously, I'm going to sell my wares and say, come and talk to a mortgage broker. But in reality, the mortgage broker that's the first job that we do, is actually pick apart what does income look like? What are your household expenses? What's left over? And looking at that over an historical period, as well as what do we think it will look like in the year ahead.
So is that meeting hard? Like, do I need to prep for that?
No, not necessarily. I mean, in some instances, it can be a rude awakening for a first home buyer to understand the complexity behind it. But at the same time, it puts things into context, and it kind of it separates those from those who really want to buy that first home versus those who are kind of tire kicking along thinking, well, maybe I can do this one day.
So you should do it regardless and sooner rather than later.
Yeah.
At least then you can.
It puts some context around what's affordable.
Right.
What can you do?
Okay. And sometimes that can be a bad story.
Well, sometimes I use this phrase a little too often sometimes, but people will often come and have a conversation with me wanting to buy champagne on a beer budget.
Yep.
So sometimes that discussion will be a bit of a rude awakening around the person who thinks they're going to live in a 3-bedroom Art Deco, perfectly renovated property in Elstonwick. And then there'll be others just saying, look, I want to get a foot in the door. I'm desperate to do this. I'm sick of renting. I want to build some equity, and where do I start?
Yeah. Okay. So to do that meeting is not difficult, and we should do it as soon as possible.
Yep.
And then we're going to get some guides that are going to come out from that.
Yep.
If I'm looking to borrow, what are like what are the elements that a lender is going to go, oh, that's a really good sign, and what are the elements that a lender's going to be, no?
Okay. For first home buyers, probably one of the starting points that we would do as part of that discussion around income and expenditure is also get an understanding of someone's credit history. So credit history could be as simple as…
Sounds American.
It does, but it is somewhat mirrors the US model, but Australia is probably slightly less sophisticated in the way that works. But the idea behind it is that the deeper or the more stable your credit history, and therefore the better your score, theoretically the easier it is to access finance.
What's a credit history?
So credit history will be simple things like if you think about maybe when you turned 18, you probably got yourself a credit card. So that will establish credit history in that you have now got some established credit, but then it's a question of making sure you repay it on time every time. So if you haven't repaid it each and every time on time, that will detract from your score.
So all the banks know about your credit history with ANZ, even though you're applying for a bank with Westpac?
Correct.
That's a bit scary.
Correct. So it'll show things like you mentioned before, Afterpay. It will show quite an extensive record. So basically any time someone signs up for credit, even if it's just, to give you an example, you walked into Harvey Norman and thought, I'll do that 12-month interest-free to go and buy my coffee table, that is a form of credit. So that will then appear on your credit history. Even if you didn't take the credit up, it will appear on your credit history as an inquiry.
No, that's interesting. So if we've got, let's say that we've done that, and I'm going off on a little bit of a tangent here, but let's say you're a young kid, you get your credit for your mobile phone because you wanted the iPhone 15 Pro Max, whatever they call them, and you got that and you missed a couple of payments or they were late. Is that going to impact you down the track, and how long down the track?
Yes, it does. Definitely it does, because it will have an impact on your credit score.
Okay.
It would potentially determine maybe which lender you would go to. So there are some lenders who won't purely base a credit decision on a credit score. And in some instances, there are some lenders who don't even look at credit score.
Yeah.
They'll just look at the fundamentals of the rest of the application. But generally for first home buyers, if you're assuming you're going to I'll call it a recognised lender, it doesn't have to be a big four bank.
Yep.
They're generally going to start with having a look at credit history.
Okay.
So to answer your question, that history will actually remain on your credit file for a number of years. So if
how
it's
many?
explainable, well, theoretically, your credit history remains, I think it's on file for 6 or 7 years.
Wow.
So in terms of repayment history, actually, off the top of my head, I should know the answer to that. I'll say it's at least 2 or 3 years. I think it might be 2. So generally, if it's, let's say, I don't know, little Johnny took out his credit card and went overseas for 2 months on a backpacking holiday, forgot to make his repayment, comes back, oopsie, repaid it. That might be a story that we could actually go to the bank with and provide evidence. So they might overlook that on the basis that everything else looks okay.
Yeah. Okay. So, but it is a bit daunting. Like I'm thinking, you can't do that in real estate anymore in terms of, putting people on the bad credit history and this type of stuff. That's all gone. But in finance, it's fine.
Yeah, I don't know that it's fine, but you need to, it needs.
But it's fine for them to put, to have a record of your credit
Right.
that's 4 or 5 or 6 years ago.
Yep.
And that's all fine. But you can't do that for real estate.
Okay. There you go. You're educating me now.
Well, I find it fascinating. Like it's why aren't they equal?
Yeah. Interestingly, if we do get a first-home buyer who doesn't have an established credit history, so let's say 24, 25, still living at home with mum and dad say, hey, it's time to move out. Let's go and get a pre-approval.
Do you have to wait until they're 24, 25?
Oh, I'm just picking a random number.
Tell me it's earlier than that.
It might be. But let's just say that happens for a minute and now Johnny doesn't have a credit history at all.
No, his name's Lucho.
Okay, there you go. Right, we'll run with whichever name you prefer. If that were the case, in some instances, we might look at things like bank statements to demonstrate savings history in replacement of a credit history. Or if that same person moved out and rented for a year or two, we might ask for the rental statement history to demonstrate that they've at least paid their rent on time.
Okay.
And get a rental report maybe from an agent to say, hey, they kept
get a
it
rental
clean
ledger or something. Okay.
The rental ledger, that might help.
Okay.
It's not a complete substitute, but it can help.
Okay. So basically you've got to watch your back, but it's not going to hold you back forever. If
Correct.
you did something stupid when you're 18 or 19, you're now 27 or something like that, you shouldn't have to worry about it.
Yep. And again, the key in coming to a mortgage broker, we would anticipate that. So we'll look at your credit history, sit down, run through that credit report and explain it to you, but then also look at here's a strategy to not necessarily overcome it, but how we work with it. Whereas if you walk straight into a bank as a first home buyer and just apply, bank's going to say yes or no, that's it.
Yeah, gotcha.
I won't give you that detail.
Yeah, so I know this is tangent and I'm bad at this, so you just suffer. Can I find where my credit score is today?
Yes, anyone can.
So what is it, a credit score website or is it?
Yeah, so there's multiple providers. We typically use a company called Equifax. So there's 3 or 4 major providers. Generally, some people will come to me and say, hey, I looked online, I got this free credit report. It's a little bit indicative, but it's not probably, it doesn't carry enough detail and weight to be able to use that specifically at a particular lender. Most lenders have their preferred credit report provider.
Okay, so you could get a snapshot, but you're not going to know, it's not going to be the perfect one.
Yep.
Okay, cool. So so the bank's looking for a credit history.
Mm-hmm.
What don't they want to see other than sort of those negatives? Is there anything like red flags when you're going to go and get a loan that you just want to be really cautious of at the moment?
Look, gone are the days where banks will just say, look, you're a casual employee, you can't get lending.
Right.
But having said that, you still have to have an overall application that shows some stability and strength in it. So, clearly someone who was, let's say, a kitchen hand for the last 6 weeks applying for $1 million home loan, clearly they're going to struggle. But if they've been working in the hospitality industry for the last 10 years, show a good savings history, have a good credit score, being a casual is not a blocker to being able to apply for finance these days.
What about in the real estate industry if you're a commission salesperson?
Yep.
How do banks view that? Are there certain banks that are better for those type of things?
Yeah, definitely. There's definitely some lenders who treat it more favorably than others. But different lenders will have different policies. Again, I'll keep coming back to this is why you talk to a mortgage broker. The whole idea with a mortgage broker is that we can navigate which lenders will look at it more favourably than others.
Yep.
Really good other example will be education industry. Teachers quite often will have things like novated leases, etc. So there are certain lenders who work with the education industry far better than others.
Okay.
Even emergency services people who have, lots of allowances, be it overtime, etc.
Right.
There are some lenders who are better
they're
than
sharper in relation to that. So we're looking at the process now.
Mm-hmm.
They've come in and they're having that meeting with you. They've avoided some of those bad things. That's all looking good. They're not ready yet. Are there any sort of government schemes to help them get ready?
Yeah, there's multiple government schemes. So it depends on which state you're in, what sort of property you're looking at as well, price point, maybe even your income threshold.
Well, we're Melbourne real estate, so let's talk about Melbourne itself. So if they're here, where should they be looking? I'm just thinking if they're listening to this and they're like, oh, I didn't know there was government schemes. Where do they look for government schemes? Do you guide them there, or?
So we generally we'll guide the client towards, hey, these are the 2 or 3 websites you should have a look at. Educate yourself on it first.
Right.
So as an example, there's one government scheme that allows you to buy with as little as a 5% deposit.
Okay.
But there are certain property types that you can and can't buy, certain price points. In some instances, even with certain lenders, it may be even around location or postcode.
Okay.
So it can get quite technical. There's not a, hey, Steve, you can buy in any postcode for any amount and you'll get you get a government guarantee. So we will guide clients towards that. But usually one of our early discussions is around, hey, Steve, what sort of property are you looking at buying?
Yeah.
And what's the price point? And then we'll match that to confirming your borrowing capacity and then guide people from there.
Okay. So first step, talk to you.
Yep.
And then worry about all the rest of it. So don't go backwards and try and figure it all out yourself on Google.
Yep.
Go to your mortgage broker, talk to them about what you're trying to do, and then listen to their advice about how to achieve it.
Absolutely. It's all in the planning.
Okay, perfect. So then if we're looking at the later session, so let's hope that everybody's been able to get onto the board where they can, if they can. And then we look at investors in the market. They've been beaten up recently with all of the interest rate rises. When should they be considering a refinance?
Okay. Look, for most of our clients, we will review their home loans. So whether you're owner-occupied or an investor, the process in that regard remains the same. We would check on an annual basis for all of our clients what their rates are. Does it remain competitive? Does it still align with what the client's trying to do? So for an investor, clearly, the needs are slightly different. So it might be, as an example, a lot of investors will start on interest-only repayments and prefer to allocate surplus funds towards paying down debt on their owner-occupied property. Kind of common thing. So in some instances, the review might be, hey, Steve, your interest-only period will expire in 6 months' time. It's time for us to review the market now if you want to extend your interest-only period, as an example.
Yeah.
So having said that, on an annual basis, we'll review, again, regardless of whether it's owner-occupied or an investment property. Generally, we wouldn't recommend to clients refinancing inside 2 years.
Yeah, okay. So, but essentially what you're saying is that if you're an investor and you've borrowed 7 years ago, 10 years ago with your local bank to buy that investment property and you haven't done anything since?
There's a pretty strong chance you're paying way too much.
Right.
Bank will not reward you for loyalty.
Right. So it's like that. What's that ad at the moment where I can't remember the name of the ad, where they're pushing you to some non-bank lender or something like this, and they're not rewarding for loyalty. It's on SDN. I can't remember what it's called.
That one.
Doesn't matter.
Can't help you with that stuff.
Well, I was trying to come up with something. Doesn't matter. We'll move on. So we're basically saying that if you don't have a mortgage advisor, then essentially you're putting yourself at risk of being taken advantage of by the banks because they're not rewarding you for loyalty. And if it's been more than 2 years, 3 years, 4 years, it's really
Absolutely.
starting to head south.
Yep, absolutely. 100% guaranteed you'll be paying over and above what is market competitive.
Perfect. So I'm in that box. Let's pretend I'm in that box. I'm not, because I know Jason. But if I'm in that box, how much of a pain in the ass is it going to be for me to do the documentation that you need in today's day and age?
The process itself has become simpler than ever. So there is still an element of some hard work that might come from you, Steve, to send me the details. So simply put, it'll be there's a simple questionnaire just to confirm from my perspective as a broker that I'm capturing and understanding all of your needs. So that sounds swell, but it is making sure that we're aligning with whatever your priorities are. So that might be, hey, Steve, what are you planning on doing over the next year, 2 years, 5 years, 10 years?
Yeah.
There's no point in me recommending, as an example, a 5-year fixed rate if you intend to sell the property in 2 years' time.
Gotcha.
So there's a questionnaire around confirming those needs. In terms of other information, it'll be, the typical IDs things. So it's driver's license, passport,
online.
that stuff. Yep, really easy. Couple of pay slips.
It's easy.
Yep.
It's in your emails.
If you're self-employed, that would be tax returns and generally 2 years worth. Then beyond that, there's generally a little bit of additional information that might be around. So if you're an existing property owner, it might be, hey, can I have a look at the your rental income statement, a copy of your rates notice perhaps. So that's all done electronically these days. We have a secure portal. I'll send you an email and say, hey, Steve, can you log into our portal, upload your information, answer these questions, and then the work's back with us.
So that's 2 or 3 hours.
Yeah, it shouldn't even be 2 or 3 hours.
Well, there
if
you
you're
go.
reasonably organised, maybe less than an hour.
So it's a session.
Yep.
So basically, have a session. If you've got a property and it's an investment and you haven't done anything about it for 2 or 3 hours, it's time to get a broker. It's time to then do your review, and it's trying to make some things happen.
Absolutely.
Jace, thanks for coming in. That was terrific.
Wow, that time flew. Thanks.
Certainly does.
Well done.
Cheers.